You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for episode 2 of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo. I will be your host for this journey extraordinaire through the world of options. Remember, if you like what you hear, this program, anything we do here on the network, leave those reviews. Keep them coming on your platform of choice, iTunes, your Google Plays, wherever you get our stuff, the App Store for our app. A lot of you like to go there as well. Even on the old tubes. Even though it's a little bit different on the YouTube, it's more of a comment, but still, leave them on your platform of choice out there so new folks can continue to discover. If you like what you hear, you can always share it with people too. The more, the merrier out there in these troubled times. Keep those questions coming too, particularly for a day like today. Mail Block Thursday. Going to rotate a bunch of you onto the program. Let's see who else we're hearing from out there today. First, let's go out to a quiet, a tranquil, some might say idyllic hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Happy to be here. No one out-uncles the mic.
No one out-uncles the mic. Indeed, sir. And then we turn our gaze a little bit farther east and a little bit farther north, all the way almost to pretty much the end of these here fine United States. But before we get out into that big, broad Atlantic Ocean, we dial it back a little bit to the GIOVINAZZI compound there on the shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. By way of Carmen Line Capital, Mr. G, welcome back to the program, sir. How goes the clam piracy?
It's getting a little cold for the pirates. It's in the 20s, so I'm not going to say they'll. As long as there's not ice, a foot of ice over the mud, they will be here, but as of right now, it's been a little quiet in clam piracy land.
So COVID resurgence be damned, the clam pirates will keep coming, but the weather, that's what puts them out.
Pretty much. But, I think clam piracy is a pretty, they're kind of socially distancing already.
Depends how many pirates they're squeezing into that boat, right? If you got 8 guys in like a 2-person boat, then maybe not so much. But if you got
not quite that big,
just one or two, I don't know how vibrant the clam piracy industry is. If you want to write into us, listeners, if you are a clam pirate, perhaps you're harrying the shores of Maine right now, write into us, let us know as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
That's a good verb, harrying. Doesn't really get its due outside of the age of piracy anymore. We need to bring that back in the year of our Lord 2020. Why not? Everything else is making a resurgence, good and bad. Let's bring back the harrying of the coast. All right. Welcome to the Trading Block. This is indeed the portion of the show where we break down what the heck is trading. And going into the end of the week here, it seems like everyone's kind of spent. Everyone's kind of just like, a whole bunch of shoulder shrugging going on out there. Market's kind of mixed. Pretty much depends where you're hanging your hat, how your day is looking. S&P off slightly, about 0.15%. The Dow off a wee bit more, almost 0.5%, getting close there. And the NASDAQ in the other direction, up almost 0.5% out there. That's kind of where we find ourselves today. The vol products coming into showtime were almost exactly unched to the decimal point, which is kind of weird. A little bit of a shoulder shrug out there in the vol space as well. VIX at the start of the show was at 23.25. That was pretty much exactly unched from our last show. VVIX up a little bit, up to about 115.25. That puts it up, about 2.25 handles from our last show. VXX was also unched at 18.75 coming into showtime. And our old friend VolQ just ticked up right before the start of the show to 24, which puts it at exactly unched as well. So from a vol perspective, show on show, there's a whole bunch of going on out there right now. But we have some fun stuff to parse. Don't you worry, listeners. Let's go back around the horn the way we started. Let's go back out to that tranquil, that idyllic landscape known as St. Charles, where we are joined once again by the Unklest of Mike. Mr. Uncle Mike, I guess if you're a NASDAQ person, it's an Uncle Mike type of day. The rest of the indices, not so much. But what is lighting up your tape out there today, sir?
Well, a couple things. We dipped below the 3,600 mark. I talked about that on Monday, so we definitely were not able to hold that. And that was primarily yesterday. So we have that going on. We've not had a major bond rally. Bonds have rallied somewhat. I'm talking about the price, not the yield. But right now, there's still this situation to where a lot of times if we had higher interest rates, then if the stocks go down, bonds can come up. But there's really not a lot of motivation for people to put their money in bonds right now. Unless you're doing IEF covered calls like I've talked about on the show several times. But really, there's not a lot of motivation for that. With what we have going on right now, it's just the markets appear just to be having a good old-fashioned pullback. At least by pullback, I mean over the course of the last couple days. But I think that 3,600 is going to be a mark that we need to get through again, of course, if we want to go higher on SPX. But I do think that's a key number with where we are at. And it seems like we're just kind of playing wait and see. There's no real news from the standpoint like, once we get the election results, we'll do this, that, or the other. I think that the election is becoming more and more of a done deal. There is, because Trump has not conceded yet, so I suppose there is still a chance that he can get into office for a second term. It's looking less and less likely, and slimmer and slimmer to none every day, but you never know. So we don't really have that news to watch out for. And so the main thing that we're watching is just how do stocks perform, or the various earnings that are still available as well. But how are actual stocks performing? And that's what we're looking at this point in time. COVID, looks like things are going to shut down again in a lot of areas. But we'll see if that lasts. We'll see if the market can prepare for that. Because in reality, the stocks that do well in COVID are doing well anyway. The Apples, the Amazons, the Googles. And so the one thing that is lighting up my tape that would be kind of a concern at this point would in fact be the financials. When we had the initial good COVID vaccine news a couple of weeks ago, financials shot up. And now, if we are going to be shutting down again, is that going to be something that's bad for banks? Because that has held pretty close to the higher levels with which it shot up. So that's something I'm going to be keeping my eye on. Full disclosure, for a lot of my clients, I am selling covered calls on that right now. But nonetheless, a lot going on from that standpoint, and curious to see if this vaccine, if it comes out in December or January, I know it's going to be coming out in stages, but I'm curious to see if this is something that can really provide comfort to the markets.
Comfort to the markets, indeed, because we all know these markets, They need more comfort. They're at all-time highs in a tumultuous year. They need more comfort. We know when we need comfort ourselves, who do we turn to? But the rockingest of lobsters. He's a man who just drips and oozes comfort. Mr. Rock Lobster, sir, comfort us all. Indeed, comfort the markets. What is on your radar today, sir?
That's a tall order to comfort the markets. Hey, just come in and comfort the markets. Well, I will say so. I will provide a little bit of comfort, maybe, and I can understand Mr. TOSAW's his caution here. But when we had these upswing news, let's say in June, remember how giddy everything was in June. I can just name some prices for you. Like a stock like Wells Fargo was in the mid-30s. Exxon was in the mid-50s. Lots of stuff. Everybody's like, woohoo! The airlines were, American Airlines, I think it was $18, $19. A lot of the oil stocks, probably 15, 20% higher than where they are right now. That was June. When we had their first lockdown, and then all of a sudden we kind of went back into the summer lockdowns and whatever, and everybody got all bent out of whack. And the market technology went one way, and literally, I think, 10 stocks went one way, and pretty much every other stock went the other way, south. And this time we have this spike in cases. We had we have a second vaccine, I think even a third vaccine by an AstraZeneca partner is coming, where they believe these therapies actually they work, essentially. They go and they beat up the virus, so they work. And they're looking for fast-track approval. So that is hanging in one end. And then we have New York City schools yesterday say they're going to shut down. They're canceling Thanksgiving, all this kind of bad news. So headline, all that headline news weighs heavily. But the big but is, we haven't, like when this happened last couple of times, we saw VIX jump back into the mid 40s or very high 30s. As of right now, we are not in the danger zone anymore. And for this week, we have closed in zone 3, which is the third quartile of vol. If today holds, and it needs to hold a lot for me to win my crystal ball bet, because we did see 21.5 this week, but it was fleeting. But we have less vol, less jump in VIX on bad news. So what I read from that is, okay, the news isn't good, but the market, I think, is still, I would say, leaning pretty heavily on the vaccine. If you look at the betting line for Trump, it doesn't look good for him. I mean, the odds are very, very slim at this point, unless some major thing is uncovered, which does not look apparent. But it looks like he's picked up a couple of votes here and there as the counting has gone on, but I don't think enough to move the needle enough. But we have not. But VIX is not making a run over 24. Now it could happen, by the end of today, with not a problem. If people start feeling grumpy enough, that could happen. But we haven't seen the vol shock from this move. So what I would say is, yes, this is bad. We have all these cases now, and there's reports of hospital worries and things like that. It doesn't appear to be catastrophic, but look at some sensitive areas. Like look at the oil stocks. They're I would say they're flat today, and they've definitely been moving hard up on this news. So I think that's a good sensitive indicator if you want to see maybe where the rest of the SPX is going. But as of right now, we're not. All we did was come off the very lows of VIX for the week. I think I'm going to see like the cash maybe traded just south of 22, maybe like 21 and change or something like that this week. And we're still a little ways away from there, I think. But again, we're wait and see mode. So we didn't see that huge jump in vol from this COVID thing. So as of right now, I don't know if we're going to see it. So to make you feel a little better, more cases is bad, but vol, at least from right now, is not reacting how it has in the rest of 2020. Much more muted vol response, I think.
Let's see how the markets are reacting to this kind of a bit of a shrug the shoulders type of day out there. Let's start in the major indices. VIX actually doing some paper, 341,000 contracts as of a couple of minutes ago here. And the ADV, worth noting, has also ticked up yet again, about 20,000 contracts from our last show. It's up to about 609, so north of the 600K level. We haven't seen the ADV that high in VIX land in quite some time. So maybe a sign of a little bit of robustness out there in the vol space. We'll see. But just not too long ago, it was threatening 300K, so pretty much half of what it is right now. So a little bit of return to some shades of normalcy, not from a valuation or volume, or I should say not from a valuation or level perspective, just from an overall volume perspective, getting a little bit of decent numbers on the tape out there in VIX land again. SPY, a little bit less, but it's still north of half of its ADV, about 2.2 million out there right now. The ADV is about 4.1 million out there. The S, 518,000 on the tape. The ADV, 1.1 million out there. The Qs, 419,000 on the tape. The ADV, exactly 1 million, 1.0 million out there. It's not quite half a day's worth of paper in the Qs. The IWM feeling a little bit of gusto, almost at half their ADV, not quite. They're at 310 out there. The ADV is about 651 in IWM land. Small caps, interesting stuff. If you haven't paid attention to, we tweeted out an article from our friends over there at ORATS. Also discussed it on the advisors option. That'll be coming out, hitting the network probably next week. So if you listened live yesterday, you got to hear it early, talking about how the skew out there in small caps is, I think, to quote Matt, is technically insane. The bid to those calls that we're seeing out there. And it's a good breakdown. We have it on the website now. We've tweeted it out if you haven't seen it. Or the ratio of the meteor in the money and at the money calls to the, I think it was the 5 delta calls that he was talking about out there, is pretty much beyond what he's ever seen out there in small cap land. He looks at it through the IWM lens. We could take that analysis and apply it to pretty much any Russell 2000 product out there. Interesting times in small caps. We'll get into small caps a little bit later on in the day in TWIFO. Now let's get out to some of the most active single names. Now this kind of a tale of two cities here in the bottom half of the top 10, the top half. The bottom half only cost you $1.63 to break into the top 10. That's a more normal day than what we've seen out here of late. Some days 200,000+ to break into the top 10. Nope, today $1.63. That gets you to Microsoft. Then we got number 9, good old GE, one of the Rock Lobster's favorites out there. I know he loves himself a little bit of GE at a good old, 180,000. Then, I'm joking because the actual Rock Lobster's favorite, I do believe you guys have been talking about this with the meatball in your Robinhood Little John product. This is Fuel Cell Energy Inc., ticker symbol FCEL. First time on our top 10 radar, that's for sure, because it's a $5 name, $5.33. And guess what? Earlier this week, it was a $3 name. So this thing has seen an enormous move, even though JP Morgan just cut it to neutral 4 hours ago. You know what? The Robinhood masses don't care. They're bidding this thing up. I know they've been bidding up some calls to the tune of 186,000 contracts out there for number 8. Mr. Rock Lobster, I am correct, am I not? Is this not one of your Robinhood Little John names you guys have been profiling, sir?
Yes, it has. It's gone pretty well in that name. It's kind of crazy, I guess. In short, we're looking at some puts for it to kind of pull back a little bit, maybe a little bit like JP Morgan, but it's just one of those, you look at like this and Plug Power and all this kind of other alternative energy stuff with Biden coming in, maybe they start throwing some money at these companies. So there has been a huge the volatility in fuel cell and like the 8 calls or the 7 calls. I mean, they're still 9 cents, and those are $2 out of the money and a $5 stock. I think the vol was in the 500s this morning for a while when it was trading 6. So that's only 2-day volatility, but it was still pretty substantial. And to be honest, I think anything can happen with that stock. You wake up. It could be $4, it could be $7. Who the heck knows? So it has been taken over by the Robinhood masses for sure.
Well, I guess if they've been following your Little John product, they're doing all right. I know Mark was talking earlier in the week about upside calls. I forgot what strike, but it doesn't really matter what strike at this point. Anything north of that 3 strike is looking pretty good out there. So FCEL in our top 10 and probably maybe making some return appearances at this level. Number 7, NVIDIA. Man, they blew the doors off of it on their earnings this week. 232,000 contracts on the tape. Of course, you can tell they had good earnings because the stock is down now, off $2. Still trading $5.35. They pretty much couldn't do anything better. Their sales numbers, their revenue, their guidance, they pretty much upped it all. So, of course, the stock is down out there. 232,000 contracts. Number 7. Number 6, good old Baba back on the tape for 278,000. Number 5, our friends across the street making some headlines these days. Boeing, not all of them good. 308,000 contracts. I'm waiting for the headline where they bring back their delicious Wednesday barbecue, but alas, not so much. Number 4, AMD, 393,000 contracts. Number 3, NEO, 692. NEO's just a perennial top 3er these days. Let's see where our friend NEO is hanging its hat right now. 47 and about a half or so. Up another $2.50 or about 5.25%. That sounds like a typical Tesla-esque type of day where it's moving about 5% a day. Yeah, that sounds about right. For NEO. Good for 692,000 contracts up there. Number 2, the old Apples, 754,000. You know that means the big dog back in the driver's seat. Tesla, 1.15 million. Trumping the fruit company out there. So the battle for the top portion of our top 10 is getting hot and heavy. Maybe FCEL will make it out there someday. Who knows? Crazy things afoot. Let's see what's afoot out there from an earnings perspective this week. Spoiler alert, we had a few. It's still hot and heavy out there. Tuesday, we had Walmart, Home Depot, Kohl's, NEO. What we were just talking about, the big boys out there, NEO. Wednesday, we got Target, Lowe's, and NVIDIA. Thursday, Macy's, Intuit, BJ's after the bell here, and then, BJ's was before the bell. And then Foot Locker on Friday. We got a few of them here. Let's see. We got a move results report here for NVIDIA. Let's do that one. All right, yesterday after the bell, they were at 537.15 going into their announcement, listeners. They were pricing in a pretty hefty 6%. And you can probably guess what I just said with the stock off $2. That didn't work out. This is just an annihilation of vol buyers out here. We broke it down with Matt. He generates all these reports with his team over there at ORATS. You can check it all out for yourself very soon on the Advisors Option Program, listeners. But yeah, moral of the story, every season this year has gotten worse pretty much for a vol buyer's perspective. And NVIDIA is not bucking that trend. They only moved, going into this report, 1.4%. I think they were off a little bit more than that a few minutes ago. Let me go back there. Get off of our old new friend here, NEO, and go back to NVIDIA. No, they're off 1/3% now, so even less. So, yeah, vol buyers just cannot catch a break out here in the single names. BJ's Wholesale Club, they were before the bell today. They went to their announcement at $43 even. I like a nice even number close, makes things so much easier. They were pricing in, get this, listeners, 7.8%. They were pricing in some hefty juice. And, in this scenario, that's not going to work out, and it didn't. They, coming into this report, had only moved about 80 cents, which was good for a little bit less than 2% out there. So, yeah, just 76% underperforming of their straddle, the same exact as NVIDIA out there. So, yeah, that just shows you, if you're buying juice on any of these names going into earnings right now, listeners, you got to be aggressive on your gamma scalps, or more likely you got to get out of it before the event itself. Because if you wait through the event, it's just an annihilation. Usually we say there's not really any bias. It's a coin flip out there in earnings. These last few seasons, it's just been an annihilation of vol. Now, that's not a green light to go out and just blasting away at every earnings name you could think of, because the ones that do move do leave a mark. But still, crazy stuff. Let's look really quickly what's after the bell today. We got HP and Intuit. Got Best Buy after the bell as well, and Dick's Sporting Goods. We'll break down a couple of those. Intuit, $354.75 going into this report. They were pricing in $12.37. In the past, they moved about $9.50. So extra juice in Intuit. I think we can guess how that's going to go. HP, 19 3/4, a little bit cheaper out there. They're pricing in about $1. In the past, they've moved 77 cents. So I'm guessing they're going to move about a nickel, given what we've seen past his prologue out there. Best Buy, with 117 3/4 out there is where they were trading as of this report. They're pricing in $7.80. In the past, they moved 7.02, so a little bit rich. We'll see if they can keep that up. And then Dick's was at 54 1/4. They were pricing in $4.63. In the past, they moved $4.38. So a little bit extra juice on both of those. Not a ton, but these days, any extra juice is just an additional road to climb, an obstacle to overcome out there, which is very challenging in this environment. Speaking of challenging, let's look at the season report here really quickly as well. We're at a whopping 71% right now, listeners, in terms of how much bang you got for your straddle buck out there. If 100% would be you got pretty much 1-to-1, you bought a straddle for $5, it moved $5. But in this case, you're only getting 71 cents on the dollar right now, premium buyers out there. The worst weeks were week 1, 2, and 3. Week 1 was 65%. Week 2 was 56%. Week 3 was also 56%. Week 4, 85%. The only week that even broke even was week 5 at exactly 100%. And then week 6 down to 81% so far right now. Still got some big names to pop off, though, so we'll see. But so far, yeah, this has been a bit of an annihilation of a season out there. Let's see what we've got going out here in terms of weird paper, though, because it is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Time to get weird. Time to get wild. Time to unleash our Eye of Sauron and see where it fixes its fiery gaze. And let's see. First off, it has fixed upon DHT Holdings, Inc. This is double hull tankers. This space, this category is all the rage. Not too long ago out there, listeners, everyone was getting into, the shipping and transport of crude and nat gas and everything else out there. These days, not so much, but doesn't mean our Eye of Sauron can't glance over there every now and then. DHT right now, ticker symbol, of course, DHT, at $5.14, up about 11 cents or nearly 2%. This is a name that over the course of the past year has had some interesting movements. A year ago, it was trading $7.01. So interesting how this name has ebbed and flowed. It got up to $8.60 in early January. That was, of course, I think probably right on the heels or right around the time when we had all those little bit of tensions in the Middle East. And then, of course, it began a long, slow decline. By the end of January, it was already trading $5.63, so it sold off pretty hard. And then it rallied again, weirdly enough. First off, it kind of hovered at that level, $5 or a little bit higher, a little bit north of it, during most of the sell-off of March. It actually rallied on March 13th back up to $6.60. Then it sold off again, $5.80. Then it rallied again pretty hard on March 30th, up to nearly $8, $7.95. And then it sold off yet again. This one's had multiple fits and starts along the way. Then it rallied again, and let's see, to April 21st, $8.50 or about. And then it kind of sold off yet again by May 21st, down to $5.60. So this one's been all over the place. And of course, on June 8th, it saw another peak of $6.25 before selling off again. And then rallying back to $6.25 in August. And so this one just kind of had just numerous tilts at the windmill over the course of the year, but none of them have really been sustainable. We saw another rally again not too long ago, about a week ago, to $5.60, and then it gave that up again as well, and we find ourselves right now $5.14, back up about a dime or so, just ticked down a little bit out there. So interesting topsy-turvy period for good old DHT. Let's see what our Eye of Sauron found. This is the Where Mr. Rock Lobster, for the size of it, but also for the term. These are the Jan 2022 $3 puts going up for the old 30 cents 10,000 times. Here, these things, by the way, if you're wondering what kind of liquid, juicy markets we're getting in DHT right now on the put side, no bid at 40 cents. So there you go. Good luck sourcing some liquidity out there. But they found some to the tune of 30 cents, Mr. Rock Lobster. So a dime off the offer here. This one up on the old ISE out there. If you're curious, this is, let's see, this is about a 47 vol that they traded on these things. So an interesting one, very long term. It's been a while since we've seen over a year puts going up. This one looks like maybe Mr. Rock Lobster, they're protecting themselves here for the 3-strike, paying 30 cents. If they're selling them, I may have some interesting comments for them along those lines as well. What's your take here on A, this crazy, crappy market? B, what do you think these guys were up to within these very wide goalposts? And then C, what are your thoughts on it in general, sir?
Mr. Longo, what's wrong with a 35-cent wide market like that?
I'd take it if there was a nickel bid. At least it'd be something, but it's not. It's 40 cents.
It's this is a weird one where my nose feels like this was a line in the sand put. It looks like it's almost like there was a bid put up there for a little bit, just looking at the volume. But then it filled, but it was only like very small lots traded prior to the bigger numbers. So, I want to say this is suspect. I'm going to be honest with you. It's a little tilting at windmills here. It's one of those, okay, 10,000 go up 30, right? And then 15 go up 31 and a few go up at 35 cents, a 3-lot, right? So the options are going to go out marked what? Oh, and then a 10-lot trades 30. So for a second there, I thought the 10,000 lot trader was going to have a nickel marked in their face at the end of the day. Which, can happen sometimes. This one, though, why would you buy those 3 puts for 30 cents? I could see that a professional firm, they buy 10,000 of them, they buy maybe 300,000 shares of stock, and they just try to trade back spread or something for a year. I can see that side, but it does feel like it has a line in the sand quality to me on this one.
Yeah, I don't like this pretty much either way. I don't like spending about 6% of the value of the stock, or an already cheap stock, to hedge it over $2 below where it is right now. I don't like any of that. What kind of hedge is that? And then I don't like selling it either, because you're tying up capital for over a year for what, this 6%? I don't like it either way, Mr. Rockwell. Let's make it go away. What do you think?
I like the shorter term line in the sand puts that, for people that are aggressive on the delivery. This is, let's just put this in the head scratcher category, I think. I don't like sitting on either side of this one.
Yeah, let's just bump this one away. I don't like it either way. If you're going to sell line in the sand puts, they can't be out over a year. That's a fundamental rule. A line in the sand for line in the sand puts. They can't go out over a year. That defeats the whole purpose. So yeah, either way, I don't like it. Listeners, do you like this? I don't know. Maybe you're more charitable than I am, but I'm not liking this one. Let's go out instead to, you know what, Mr. Let's see. We got a couple of reviews. We'll look really quickly. Looks like someone likes some upside calls here. We'll give you an extra bonus one, listeners. Upside call love here in Credit Suisse. Going up today, the March 14 calls, 4,149 times, lifting the offer for 35 cents. Let's see where CS is right now. They're at 12.16, so this is pretty optimistic. So tell you what, we'll put this in the to be watched category and come back to that one. By the way, if you're wondering, that was a 35, almost 36 vol on those. Let's go back, Mr. Rock Lobster, because you're always asking for reviews. Let's do a little bit of that. Let's dial back the Wayback Machine. We have so many trades that we profiled here that we have to review, that we have a lot. We could do legions of shows for weeks just on reviews here. But let's go back all the way, Mr. Rock Lobster. Set your Wayback Machine in your brain to November 2nd. We had a twofer of trades from that show. Not that long ago, only a few weeks back here on the show. We're going to start off with what looks like, and what we thought was at the time, a line in the sand put in Global Payments, Inc., ticker symbol GPN. At the time, we profiled 8,241 of the NOV 140 puts, going up for a juicy 95 cents. He actually got a little price improvement. It was a nickel off the bid. At the time, the stock was still pretty far away. The stock was 161 and a quarter, and he got him off for 95 cents. over there on the NAM, the NASDAQ options market. It was 13% out of the money at the time, so these are pretty juicy. There were no earnings in these because the earnings were on February 11th, the next earnings, so not an earnings play, just a fair amount of juice on these Global Payments Inc. puts. And let's see how these bad boys turned out. Well, right now, I can probably tell you where the stock is, and that might give you an indication. The stock right now, Mr. Rock Lobster, $189.89. So I think these line in the sand puts may have worked out. The stock's over 27 handles north of where it was when he wrote it. Didn't really threaten this strike at all during the time. In fact, it kind of pretty much just shot right up. And this guy has some pretty good timing, and these puts are still open. Go figure. This guy wants to take all of his 95 cents. He's not closing anything. He's taking it all out till it goes away tomorrow. And he's getting his 95 cents 8,241 times. Is that your takeaway as well, Mr. Rock Lobster?
As day trader Davey would say, he wants to take his almost milli and go home. He's waiting for his whole milli on this one, I think.
Have to wait a little longer. If he gets all of it, it's 782,000. But it's still not a bad couple weeks worth of work.
It's almost. He's got a day. I think he's doing okay. Of course, you know that I believe we profiled this one and actually didn't think it was too bad of a.
We did. It was on November 2nd, as you recall. I just said it a few minutes ago.
The good news is that's the benevolent dictator. You see all. You are so. Your universe is so large. Your eye of Sauron, so encompassing. You even can look back in time, just like that, to help the listeners out.
Yes.
So it's a good service you provide, sir.
I am like Doctor Strange. I have control of time via the time stone. I can even do it one more time. Let's try it. Let's go back to that same day on November 2nd. It was an interesting day. So, yeah, that guy made about $750,000. It seems like, listeners. Pretty interesting. We'll see if he does it again. But that was a pretty juicy, I think we even talked about at the time, that was a pretty juicy line in the sand, and he got someone to offer him a little bit of price improvement on a nickel to do it, so good for him. And he's laughing all the way to the bank on this one, it seems. So far, I guess this is the order of the day here. Every line in the sand put we profiled pretty much seems to have worked. I don't know, can you recall one that's really turned out badly so far, Mr. Rock Lobster? I cannot.
I to be honest, no. Like when a good old-fashioned getting slapped in the head, I don't think so yet. We've seen a lot of deep puts purchased, but we never have caught them if it was a line in the sand that went bad yet. So far, so good. Whoever Mr. Line in the Sand is, and we'll just say he's some guy that lives in a castle somewhere because he seems to do very well. Kind of like that guy in a James Bond movie. He just lives on the rock. And he just flings stuff through the internet. He never has to leave his rock.
And he's making space lasers to come attack us all at any moment out here.
Exactly. Like the man with the golden gun type of guy. Except he's just flinging puts. He's flinging puts.
Buying options to fund space lasers. How many times have we heard that old saw out there? Let's see if our last one can keep up here. They're going to flip the script. I guess go figure, in a year that we're at all-time highs pretty much every day and we're rallying off vaccines and post-election, go figure some selling puts may work out. Let's see if the other side of that coin, Mr. Rock Lobster, the buying of calls, can also work out. This time also, same day, November 2nd, back in ING. At the time, ING was trading, where was it? It was trading $7.09. And we profiled the at the money, the Nov 7 calls going up 6,000 times, pretty much right off the offer. 42.5 cents. They were offered at 45 cents. We got a little bit of price improvement for him as well. Good for him. This was a 59.5 vols. This was a little bit juicy as well. This guy needed this bad boy to pop. This one had earnings baked in, though. The earnings were coming up on the 5th. And it seems like someone may have had a whiff of good timing about this one. Someone knew the game was afoot. Maybe they were just straight up wagering on the earnings, or maybe they knew something. Either way, they had good timing on this one because the stock pretty much took off and never really looked back. Let's go back here to the 5th. Yeah, it was trading 714 coming out of the earnings, and then bam, just rallied by the next day. It was on 9th. The week later, it was trading 8.25. It was trading 8.75 on the 10th, and right now it's trading $9.09, listeners. So these ones worked out pretty well. This guy didn't have to wait long at all. By the 10th, the stock had ticked pretty aggressively in his favor. So about a week, this thing had moved pretty aggressively. These calls were $1.75 in the money. So he was looking pretty good on his 42.5-cent call. The interesting thing, Mr. Rock Lobster, the rub. What's the rub? What's the one thing we always say on these long premium trades, right? If you get your move, get the heck out of Dodge. Get while the getting's good. At least take some of these bad boys off so you could live to fight another day and keep the profits that you worked so hard for. And in this case, someone, I guess, wants the stock because these are still open. Coming into showtime today, these things were still open, over 6,000 open on that strike, on the Nov 7 strike. So, Mr. Rock Lobster, what's up with these long premium trades? We profiled a few of these now that went aggressively and very early in their everything you could want when you're buying premium, and they're not doing anything with it. This is like the fourth or fifth time we've seen this, Mr. Rock Lobster.
Yeah, and well, the thing is like time decay. That's the problem. It's like I'm all for holding on to a call, but once the stock stops moving, it just becomes a lot less interesting holding short-term calls. I mean, you can't get around the time decay. So, on the second, or let's say we got 2 weeks ago, there was some substantial juice in there, and there's still juice in there, and you get the fast move. If all of a sudden you flatline for the next 2 weeks, even though you had a good pop. Now, in this case, you gained about $0.50, but basically, whatever value you had in the calls 2 weeks ago when it popped, all that value just starts to disappear. It just starts to decay even as the stock goes up. So you end up kind of in the same place you started with, unless you have a power move. So, I mean, they got a good move, but he's probably not doing a whole lot better than he did, a couple days after he bought those things,
Yeah, he had the good pop. If he had gotten out around let's see, what was it, the 10th? Yeah, which was like pretty much a week later, he would have looked really good here. And instead, he waited he's still waiting. He's waited another, pretty much when it expires, it'll be another 10 days. So all of the extra juice he had on these has pretty much eroded at that point. He got a little bit of lift to make up for some of it, you're right, but still not enough. So when you get that aggressive move, you got to do something, listeners, and you don't have to take it all off. If you want to keep the party going, you can, but take some. Take that from pros who've lost money on long premium trades. If you don't do something fairly quick when you're buying options, chances are it ain't going to work out too well for you. So this guy, it worked out well. I guess he's one of those few people who actually wanted the stock. Or maybe he'll take it off tomorrow. I don't know. He still has a day. But either way, we shall see. And we shall see what you guys have on the brain because it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Let's go out to the old YouTubes. A lot more of you are enjoying the shows we put out there via YouTube. Again, it's just a static image with the show you've come to know and love. So if you like to use your YouTube more as a listening platform, which we know a lot of you do, look at YouTube Music and everything else, a vast majority of the actual views on YouTube are mostly listens, then yeah, you can enjoy our content on that platform. We don't hold it against you, however you want to get our shows. We don't judge. Just like BZ Tokyo, he's chiming in on our recent episode from 950, which was titled The Cure for Volatility. And he says, after today's action, this is, of course, after the big pop on the vaccine last week, he says, after today's action, you would have thought banks are giving away free vaccine shots when you sign up for a new account. He was talking about the big pop out there in the financials that we talked about on the show that day. So, yeah, we're with you. It's been crazy price action pretty much ever since the election. We saw that massive, remember in our election special, which most of it is on the network by now, I think it might be in one or two pieces left out there. We broke it up into smaller chunks so you guys could have a little bit easier access to it in case you missed it live. And you remember there was a huge limit up in the futures that night. It seemed like the markets were favoring a Trump victory. Then the next day it was swinging towards Biden, and the markets still rallied aggressively out there. And then, of course, the week after we had the vaccine news, and it's just been off to the races ever since. So, yeah. We're in that kind of world, BZ. It's just upside all the time. Here's an interesting one, Mr. Rock Lobster. This is kind of like odd block reminiscent. This came right before the show from north of 7. So maybe 8? I don't know, maybe 10? A lot of things are north of 7. He was sharing us a trade that was talked about by someone with the handle Delta1 on Twitter. And he talked about 92 half calls going up on Friday, 39,600 times in AMD. For 3 cents. And then he chimed in today that saying they're at 6 cents now. So this guy made $1,100 in 7 minutes. First off, I don't think the math is right there, but I digress there. Because I don't think when you see a big print like this, North of or anybody else out there looking at this, a huge print, and again, size OI, he even points out there was 53,000 OI. There's a good chance that's probably closing, particularly when it's for a couple of cents like it was here. So I had a chance, actually, right before the show, to pull this up for myself and see what was going on. And I noticed that those calls you talked about, the 92.5 calls in AMD, went up, actually, the no 92.5 calls, obviously, went up on October 30th. We saw 41,000 trade that day with prices, looks like around 29 cents. And then I went and dug up a little bit further just to see, and actually a total of 39,000, which is exactly the amount you profiled here, 39,504, went up for 22 cents on the bid. So someone crushed those bad boys. And if you dig a little farther, which we actually did, look how nice we are on the show for you guys here. Dug a little farther to see that was actually a roll. Looks like a roll up from the Nove 85 calls, which he bought back about 25,000 times for 85 cents. So it's like he had a little bit of house money roll because the stock was at 75 and a quarter. Obviously, the calls had looked pretty good to him. He took them off, and then he doubled down for twice as much size. Oh, not quite twice, but more than 1x out there for 22 cents out there. So he sold those for 22 cents back on October 30th, north of 7, and looks like he took them off this Friday for 3 cents. So it doesn't look like someone went in there and just scooped up 39,600 of these bad boys for 3 cents, and now they've doubled. It looks like now he actually took them off the tape, which maybe could have been a good trade based on your findings out there. Mr. Rock Lobster, is that your takeaway as well? We got the old closing trade that people misinterpret as a big home run winner.
It would appear so that at least from a closing point of view, the closer is happy because you would assume they sold them for a better price than 3 cents.
Yes, exactly.
I think in that case, yes, we're and again, unless you know better or have any other idea, but I think with closing with the open interest reduced, somebody's just getting out of Dodge.
Getting the heck out of Dodge. And looks like a bunch of you have thoughts on Robinhood maybe not being able to stay in Dodge. First off, we have TT9 says, hey guys. Well, hello TT9. Says, what's up with Robinhood not being able to keep their freaking brokerage open? Where are all of these one-lot traders going to go if this firm can't keep its act together? And now they want to IPO? And then we have a related question from James. James L. says, I thought Jack Schwager's comments that the recent Robinhood trading boom, quote, could be a disaster to be very interesting. Do you guys agree? Seems like more paper for the options market is a good thing at the end of the day. Well, a lot to unpack. First, you're talking about Robinhood. Obviously, they've had some pretty well-reported outages out there of late, which, again, never good, particularly when the markets are moving out there. And you also mentioned an IPO. Yeah, Bloomberg just reporting this week, Robinhood's lining up advisors for a possible 2021 IPO. They say they're looking at a valuation somewhere of around $12 billion. They also see in the same article, they say they've seen explosive growth that they can't handle, triggering outrages and angry customers, or outages, you're saying, and angry customers. So that's never a good combo. Obviously, their volume they're doing is good, but still not exactly good when you can't keep up with the demand for your own platform. That'll probably maybe impact how that IPO is looking. But yeah, it looks like they are going to go public. And then your other reference is to the show I just did earlier this week. Check it out if you haven't, listeners. A good conversation with Mr. Jack Schwager, the guy who kind of launched and created that whole seminal Markets Wizards series. I've talked about it many times, that book, that initial book. We talked to Tony Sliba, and he mentioned one other option trader in there. That really kind of lured me to the dark side of options, brought me out here to Chicago, and all the rest is history, as they say. So I blame Jack for all of this options-oriented madness that has gone on since then. But it was a great conversation I had with him. He's got a new book out. He's got, of course, the Fun Seeder site. Check it out, Options Insider Radio. Or if you subscribe to the full network, you already have it. But yeah, I asked him about this. I said, hey, Jack, he's spent a lot of time really talking about democratizing the markets. And he has a whole company, Fun Seeder, devoted to just that. I thought he'd be a huge fan of this Robinhood boom. And he actually took the exact opposite approach. He said, I think this could very well be a disaster. for the markets. He talked about poor risk management and a lot of the other things that these retail traders often bring to the table. So, yeah, a lot to unpack here. Maybe let's go to Uncle Mike first. You can take these questions in any order you want. What are your thoughts on where, like, the notion that Robinhood can't keep up with all of this paper, and that it might what brokerage do you think these people are going to go to if they leave Robinhood? That's what TT9 wanted to know. And then James L. wanted to know if we agree with Jack Schwager that this whole Robinhood boom has been potentially a disaster for the market, sir.
Well, I think Robinhood's going to make it, personally. It's going to be tough. They'll have a lot of hiccups. The cult following, it reminds me of just watching that movie, The Social Network, I think it was called, the story of how Facebook started. And so whenever they were trying to get advertisers and things like that, the rationale, like, why is this going to be such a great thing? We don't get that much traffic. We're not getting ad revenue. And then I think Zuckerberg would always come back, but it's cool. And that was the reason for it. And so, and of course, we know the story of how Facebook became a great success. And I see a lot of that with Robinhood, and that there's this cult following to it, and that I think ultimately they will make it. Where people would go, I don't think they're going to go anywhere because of the fact that there's such a loyalty to them. It does remind me in some ways about how Options Express had that cult following when we first started many, many, many years ago. I know I'm dating myself bringing up that name, but it is our original show sponsor. It's not a lot of people, some people may or may not know. So that's one thing that I'm seeing. In terms of has this been bad for the market? I don't think it has. I think that ultimately when you have more people coming in to trade the market, it's a good thing. And if they trade poorly, then, well, that's on them. And so I think that there's just a lot of excitement that's happening with it. And I'm happy for them, quite frankly. They have a lot of things that they need to work out, no question about that. But ultimately, I'm not a Robinhood client, but I am happy for them.
Mr. Rocklopsy, you guys have been making a lot of effort to parse what's going on over there in the land of Robinhood. What are your thoughts on all the outages over there? Is that going to drive people to another firm? And then also, B, do you agree with Mr. Schwager's comments that this whole Robinhood / one lot influx into the options market could potentially be a disaster, sir?
Well, excuse me. I'll take those one at a time. As far as for us, the Robinhood flow has been good. We've been able to launch a good product. It's doing very well. It's certainly keeping it. It's hard to keep Mark busy because he generally has ADD, but this actually is a very good thing for him because it works really well. As far as looking at momentum and parsing momentum there. So that product has been a great success for us. Number two, they probably have outages because they have explosive growth. And that's the reality. You know, they got 18 million clients or something, 16 million customers. That's a lot. I mean, it's not Charles Schwab, who has, probably 50 or 60 million, but it's a damn huge amount of people. So I think that's the outages. They will probably figure the outage issue out. That would be my guess. And they have huge, technology is so much better now. They will figure it out, I'm confident. Most of these firms do figure it out. Even the CME, you remember every once in a while, like things would go down. Didn't happen very often, but it did. Even the whole exchange just doesn't work anymore. If that happened on the P Coast, we just I guess we're done for the day. I guess we'll go upstairs and, watch the track data machine and watch the stocks go back and forth and see if we can scalp something or, or just try to pick off the other exchange. And is this bad for, I would definitely say the retail trader is back in for the most part. If they've been long this year and they started getting back in, I think their timing was good. The market was, the SPX was 2,400. Everybody was told to stay home and not do anything. And they all started taking their government money and buying stocks. And, for the most part, everything's higher. If you recall the dot-com boom, right? What was driving equity prices back then in 1997, 98, 99, right? One lot retail traders buying stock. And then some of them spilled over to the options. It wasn't as online option trading was new back then. It was just coming in. The stuff people have now is so much better than it was back then. But what they had in 2000 was a heck of a lot better than when I started in 1989, when you basically just had to call your broker and say, I need to buy some calls. So, the progression, retail comes in. They generally only come in bull markets. That's what we have right now. How long this will last, I have no idea. But for the most part, from what I can see, they put a lot of margin restrictions on stocks. As far as the system goes, we had a pretty huge shock to the system as far as options go. And it's hard to think of a contract that can move more than a stock option, right? From 10 cents to $10 in one day. The system worked. The OCC cleared system worked. Full transparency works. I'm a big proponent of transparency in the financial markets, by the way. I think all the OTC action that goes on between the big banks, I think overall they should move to a system like that to have third-party clearing that makes people put dollars up. I think that would be a good thing overall. I am not a fan of the opaqueness in the over-the-counter market with all the big banks and currency stuff. I don't see why there can't be an OCC-like mechanism. It works perfectly fine. They can be a little onerous at times, but, that's their job. You need that third eyeball looking at stuff. So, will this end badly? It's like anything, right? The key to making money in the market is when the market's at the bottom, you got to be able to buy something. That's and I don't know if the Robinhood people are learning that, but you need to have some bucks when things look bad. So, you have a shot to make some money when things start to look good again. So I don't know if it will end badly. I know they did drive the value, and I know a lot of listeners probably won't believe it, but you guys can maybe send a note on social media to us, but what was the bottom of the QQQ in 2002? I'll bet you'd never guess what it is. It's a pretty low number. I know what it was because one of the smartest traders I know was buying a lot of it down there. And it might just blow your mind how low it got in 2002, to be honest. Well, I can give you a hint, too. You could probably buy Microsoft, eBay, Amazon, and I think one other stock. You can buy all four of those stocks, I think, for less than $50. All four names at once. So just to give you an idea, the lowness of what the QQQ was back then. But no, you can't go looking. You have to put a guess in, and post it to the option block page.
All right, Mr. Rock Lobster. That music means we are done, unfortunately. But before we go back around the horn, tell everybody what you're watching really quickly in the market, and then B, if they want to learn more, where should they go? What should they do?
What am I watching quickly? There's COVID cases, and it's really about the vaccine news. You want to see the market rip? If the FDA approves something, get out of the way on the upside. That's all I'm saying. And come to optionpit.com. If you want to check out our Little John product, which, of course, is Robinhood-esque, I think we opened some spots up. So come on, optionpit.com, memberships.
There we go, optionpit.com/memberships. Looks like Uncle Mike won't be able to rejoin us, having issues out there in St. Charles. Check them out for yourself. stcharleswealth.com is the place to go. And on behalf of the Unklest of Mikes and the rockingest of lobsters, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing. Remember, stay tuned. We'll be back in, about 28 minutes for a little thing called TWIFO, This Week in Futures Options. And then we kick it all off again tomorrow on Volatility Views, noon Central, 1 p.m. Eastern. Then we're back on the horn, back in the saddle again on Monday with another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.